Hey everyone, my name's Andy. My channel is Finding Value. If you like making money, subscribe to the channel. We talk about undervalued assets, where to put kind of what asset to be looking at or what sector that's undervalued. So I look at all these things. I share it on the channel for you guys to look at undervalued sectors and why they're undervalued. So if that sounds interesting, subscribe. Give me a thumb up for the content and leave comments and questions below. I like to answer those. This is an answer to one of the comments in the comments section. It's only 10, which means if you only have 10, what would you choose? And I put more than 10 just because I couldn't narrow it down to only 10. But I'll kind of give you the criteria and what I would look at if I was only to choose 10. So we'll go in here. I call this the only 10. So if only, well, I say around 10. I looked at royalty companies. I limited myself to just one royalty company. Looked at mining companies, oil, uranium, copper, nickel, silver, platinum, zinc, tin. There's probably more there. So I'll give you the reasoning and criteria of what I use to pick the companies. The criteria, I would really limit my explorer picks to only a few or even none, because explorers have such high risk and they do have high returns, but in some sectors, they're never going to be developed into anything. And you want to make sure that whatever you do pick tracks and moves with the commodity cycle. I would look for explorer producer companies, ones that can do both. So that those I think have some upside, but they're also producing, which will catch the move to the upside for sure. Royalty companies would be considered. I think I only picked one. Some diversified mining companies, and then I'm looking at stock investments and not physical holdings. The highest leverage, I think the highest leverage, because I know a lot of people ask this, I would invest and take more risk in the highest ratio leverage to gold plays. Those are uranium and oil. Silver is a close third, I think, in a close third. So I'm focusing on those. So the companies here for uranium, John Borshoff and Bill Sheriff both know how to run companies. They know how to develop assets. So Deep Yellow is John's company, DYLLF, and then Encore Energy, ENCUF. I've done individual videos on those on the channel, so you can search for those. I also did an individual video on Bannerman, BNNLF. That is Brandon Monroe's the CEO. It's a company in Namibia. They've got it all the way up, done the feasibility studies and everything, and they're just basically waiting for the price to go up. So I think they're positioned very well as a company, and I think Brandon can pull it off. Goviax is another one. I think they've got upside. They're a developer and they're an explorer. I am taking more risk in the uranium sector because I think the rewards can be absolutely gigantic here. I also think that there's a higher probability that these go into production because of the deficits in the future are so large that they're going to need a lot of companies to go into production. So I think they have a good chance of all going into production and all doing very well. Goviax is an African company. And then I've got Baseload. I think their property is really good. I like James as the CEO. So I think they can do something fine. I think they're going to find something, and I think it could return quite a bit. Oil, I chose the more leveraged, higher risk plays and one lower risk play. CDEV, SM, and CPE are the higher risk plays. They have more debt. And then MCF, I chose that one because of the stake that John Goff has in the company, and he's gonna make it work. So those are the ones that I chose. Copper and nickel, I like the royalty company Nova Royalty because they have royalties on both of those. I think it's very rare to have a royalty in the base metals, so I think this is the first one. And the first one I think is going to get that status where everyone wants to own it. We've got Southern Copper. That's a big copper company. I know they're going to track it. They pay a big dividend, so I think that's good. On the diversified mining companies, I'd choose Rio, VALE, BHP, and Norilsk Nickel, or Nornickel now. All those they pay large dividends. I know they're going to move with the commodity cycle. They have a wide, diversified basket of what they produce. And I just know they're going to move. If you don't know they're going to move, I wouldn't necessarily take the risk. Silver, I like EXK. DSVMF, MMNGF. The last two are explorers, but I like their location. Discovery Metals it's a low grade, and they've got billions of ounces in the ground. So I think I like both of those plays there. EXK is a producer, a little bit larger company, but I also think they have a lot of upside with exploration. And then I'd have to do some ETFs. It's a rare earth metal ETF, REMX, a copper ETF, COPX, a uranium ETF, URNM, and then SILJ, which is a silver junior mining ETF. So notice that I have more than 10, but you guys can choose and pick what you want from this list down to 10. I would not be doing the super high risk exploration companies. They're just too, we don't know if it's going to track it perfectly. So if silver takes off, I mean, you would think that an explorer would take off, but sometimes they don't. The producers definitely take off. You can see it in their chart patterns. Their chart patterns look absolutely excellent. Something like Mag Silver, First Majestic, Endeavor Silver. I just picked one because I was limited, but all those are good. My approach has been to spread it out even more so. And if you have $10,000, I would choose just lower amounts in each. That's how I would do it. I would reduce my risk and try to capture all the upside gains that I possibly could. And keep in mind, if you get a 10 bagger on $100, that's $1,000. So that's a pretty good return, and that can change your portfolio if you get just a couple of these really big returners. I mean, I expect some of these to go more than 10x. If you get 100x, and I don't think there's going to be too many of those left, but 100 times 100, $10,000. So a $100 position could turn into 10 grand if you were to get a 100 bagger, which I think is going to be pretty rare now because a lot of them have come off their bottoms, but you can still see very large returns even from these points. So this is what I would choose. You guys, remember, this is not financial advice. I'm answering a question. This is what my list would be, something like this. These are some of my favorite companies in the sectors. Thanks for listening. This is Finding Value.